ladies and gentlemen. A very warm welcome to the Q3 and 9 months FY23 earnings conference call of Hinduja Global Solutions Limited. From the senior management team, we have with us today Mr. Partha Desarkar, Executive Director and Group CEO, Mr. Srinivas Palkodeti, Global CFO, Mr. Winsley Fernandez, Whole-Time Director, HGS, and Ms. Ru Edidavira, Chief Technology Officer, Digital Media Business, HGS. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Darshan Mankand from Adfactors. Thank you, and over to you, sir.
Thank you, Seema. Good evening, everyone. We welcome you to the third quarter and 9 months ended December 31, 2022 earnings call of Hinduja Global Solutions Limited. Before we begin the earnings call, I would like to mention that some of the statements made during today's call might be forward-looking in nature, and hence it may involve risk and uncertainties, including those related to the future financial and operating performance. I would now request Partha sir and hand over to share his views. Partha sir, over to you.
Thank you, and a very good afternoon to all of you for taking the time to listen to all of us for this earnings call. I hope you have our earnings presentation in front of you that was uploaded on our website, and I'm going to refer to it as we speak. So first slide talks about the key highlights of the quarter. Without getting into much ado, let me tell you that it's been a really good quarter. Our total income growth was about 8.3% on a year-on-year basis, and an EBITDA growth of about 57.1% on a year-on-year basis. Our net profit at the rate of 51.83 crores was a big improvement over the loss of 37.88 crores a year ago. I'm also happy that the board has announced the third interim dividend of rupees 2.50 per equity share. The BPM business has signed a definitive agreement to acquire 100% stake in TechLink. The due diligence has been in progress for some time since it's signed. And we have also set up our new center in the city of Barranquilla in Colombia. That is going to be our second nearshore center in addition to the center in Kingston that we have in Jamaica. Our digital media business launched its broadband over satellite solution. It's named Next Sky-Fi, and the first variant of that product supports education and enablement. Quick input on where we stand on the much anticipated buyback plan. You would be aware that the final buyback price has been fixed at 1,700 rupees per equity share. The total consideration for this buyback would be rupees 1,020 crores, excluding buyback tax. The record date of this is the 6th of March 2023, and the total number of shares to be bought back in this buyback shall be up to rupees 60 lakhs equity shares. We'll move on to slide 6, where we talk about specific financials. Here you have the revenue numbers in front of you. Our revenues on a QOQ basis have grown from 1,075 crores to 1,165 crores. That is the 8.3% growth that I talked about. Our EBITDA has also grown handsomely from 81 crores to 128 crores. That's a growth of 57.1%. Our profit before tax was negative last year. It's a small number of 5 crores this quarter. And profit after tax is a number of 52 crores. I'd like to mention that the EBITDA out here includes other income as well. Move to slide 7. Here we are talking about on a YTD basis for FY23 overall. Compared with last year, similar YTD FY22, the growth is 18.2%, a handsome growth, I would say, from 3,262 crores to 3,855 crores. Our EBITDA has grown almost doubled, I would say. 322 crores was what it was last year. We've grown it by 94.6% to 627 crores last year. PBT stands at 205 crores and profit after tax stands at 279 crores. Once again, want to highlight that the EBITDA here includes other income. Slide 8 captures the trend line of the improvement of this business on a quarter-on-quarter basis. You will see that we've been able to, after the healthcare divestment, we have been working on the profitability of the company, which was impacted by the divestment of a fairly highly profitable business. We have been working on quietly improving the profitability of this. You can see the trend line. I expect that we would be able to improve on this further in the years to come. But as it stands, the margin expansion has been about 220 basis points. The digital media business, similar trend line. You will see that a big improvement in profitability of about 220 basis points between quarter 1 and quarter 3. Coming to the business as a whole, the performance of the CS business onshore has been showing good steady growth, significant expansion in clients and a healthy pipeline. I've been talking about the pressures that we have in the UK business. You would recall that the UK business won a large contract from the Health Services Agency, which was around track, trace and treat for COVID. Thankfully, COVID is now under control, and therefore the volumes coming out of that contract are significantly reduced from what we had initially thought it could be. And that is why there are some headwinds in this business. We have hired a new CEO of the business, Mr. Patrick Elliott. He brings in extensive experience in the outsourcing business. The offshore and nearshore businesses have actually grown very well. It's grown better than the onshore businesses, and I talked about Colombia. Our new center in Barranquilla has been set up with a team of 30 and is going to ramp up in coming months. We have a good pipeline for Colombia delivery. This is going to be a primary destination for Spanish language work as well as some bilingual work. Our digital solutions business has been a stellar performer. It grew the revenues by a whopping 36% on a year-on-year basis in quarter 3 and 51.2% on a year-on-year on a 9-month basis. Focus on deepening relationship with core digital clients, drive digital-led solutions for traditional CS clients. We are significantly strengthening the integrated sales teams. We have put the digital team and the CES sales teams together under a single leadership so that we get benefit of revenue synergies across our traditional BPM service and our new age digital service. We focus on longer term deals such as managed services and cloud, and I talked about the due diligence process that is almost close to completion. Condition precedents are being closed, and the TechLink acquisition is expected to close shortly. Moving to slide 12, little futuristic. We are shifting gears, and we'll talk about this later on in our presentation, from being a services and a labor-led business into solution accelerator and platform-led business. Some of the key solutions that we have developed in-house in the last 2 years is something that we proudly called Agent X. We've also built a cloud accelerator model for cloud telephony transformation based on platforms like Twilio, Genesys, AWS, and we've also got our new analytics platform called DaVinci. The addition of TechLink will fast-track this evolution with its diversified portfolio in data and analytics. We are still on the outlook for relevant acquisitions that can bring new skill sets and accelerate our growth in this business. By 2025, we want to be a significant digital player with a large percentage of our revenues and technology businesses. Few verbatim from our clients. We had a net promoter score of 65. That has been the highest in our history. And I'm also happy to state that this is a third-party survey that is done by Feedback Consulting, and it's done for many of our peers in the IT services and the BPM space. And this score of 65 actually puts us in the 90th percentile compared to our peer group. I won't quote the verbatim quotes. You can look into the slides that we have out there. Obviously, our clients are extremely happy. Looking ahead, as I said, we've made good strides by improving profitability by 220 basis points. There is continuous focus on improving profitability further to get to at least 10%. Work goes on. We have the demand for BPM services is strong, so we have to ride the wave by investing in an integrated sales and go-to-market strategy. We are leading with digital in client engagement. The digital media services, huge opportunity ahead, especially in areas such as convergence, broadband over satellite, education and enablement, etc. And Vince is going to talk about that in the next section. Over to you, Vince.
Thank you, Partho. Good afternoon, everyone. Vince here. I'm going straight to slide number 16. As Partho spoke about it, our entire focus as Hinduja Global Solutions and Next Digital being a part of the AGS global picture, we're looking at how to innovate and continue the acceleration into the digital space. Slide 16 will tell you that the innovative product that we launched called One Digital is already beginning to see significant traction. And one of the reasons why we believe we're seeing traction is on the right side of that slide, which actually shows rather than just launching a product, we also as AGS continue to walk the talk. We are training people across the country to be able to deliver these digital solutions, and this digital upskilling program that we launched in August last year has already about trained nearly 740 people. And these are basically franchisees who connect about a subscriber base of just under 150,000, and the process is ongoing even as we speak. That is in terms of what we're doing in terms of product. Our big foray, which is on slide number 17, is that we have successfully launched Next Sky-Fi, which is our broadband over satellite solution. Interestingly, rather than launch a pure product or a pure platform, we've actually launched a solution through a very innovative retail and enterprise model. So we partnered with Tata Class Edge, and we've already rolled out education to places in the north and northeast, including Jung in Arunachal Pradesh and Pulwama and Jammu and Kashmir. Students have already signed up there for the education. We're very happy because not only are we delivering value, but also we're happy that it's in line with the Prime Minister's vision of digital acceleration and digital inclusion of India. That's something we're quite proud that Next Sky-Fi has done. In line with that, we have also received our VSAT letter of intent last month. This reduces our operating costs further, besides reducing our lead times, obviously, and we will be accelerating the direct service solutions under our broadband over satellite product shortly. In line with that, if you go to slide number 18, we took the lead and brought together all our competitors from across the country, all the independent competitors. We brought everyone to a single room in December. And effectively, the idea was to tell the entire ecosystem that now is the time to connect together, to converge in terms of products, and therefore collaborate. So we shared various presentations were made. One was by KPMG, which gave a clear insight that the television industry is still the David of the industry compared, David to a Goliath, and there's plenty of room for growth. We also had Accenture presenting metaverse and the challenges around it and the way to go. And there were a lot of other sessions, and there is a link available on that slide. Please feel free if anyone would like to know more about those sessions. There is a link, a YouTube link embedded on that slide. You can click on that and go to that presentation. In terms of KPIs, and the next slide, which is 19, tell you very clearly of how strong the digital media business has been in Q3. Our focus has been clearly on improving the quality of revenue and the sustainability of the business rather than just aiming for top line. So while we haven't really focused on growing our business, our focus has been on quality, and that is reflected, as Partho pointed out, in the EBITDA performance, where quarter on quarter we've seen an expansion of about 220 basis points in Q3. The same story is relevant even for the YOY performance for the 9 months, where we've been able to grow in terms of our EBITDA performance, not just in terms of absolute value, but also in terms of margins over the previous year. Staying on the slide a bit, if you look at it, there's been a clear focus in terms of stabilizing the video business, which did go through across the board, across the country, went through some significant challenges in the last 3 years owing to the headwinds of the pandemic. But that, as you can see, is clearly stable and growing. Our broadband business, which is our focus, continues to grow. And all the key parameters, the 3 key parameters that you see on the second half of the slide, which is the 90-day net churn, the same month's renewal, as well as the on-time renewal, all of that is seeing very, very positive traction. That is the summary for the digital media business. I'm going to hand over to Srinivas Palagadeti, who is the Global CFO for AGS, to take you all through the financial slides. Thank you, everyone. Pala, over to you.
Thank you, Vince. Good afternoon, everyone. Thank you for joining us on this session. I move to slide 21 on the financial performance. As you know, in the last one little year over year, there have been multiple changes in AGS. The healthcare business was sold off in Jan 22, and during the year, the media business became part of AGS, right? So these results are purely strictly comparable on a like-to-like basis. So it includes all the revenues, margins coming in from the digital media business, and excludes anything pertaining to the healthcare business. So it's a like-to-like comparison. So on a year-on-year basis, our revenues are up by about 6.4%. Other income is up by about 94.4%. And total income, including other income and revenue from operations, is higher by about 8.3%. As you would have seen from the results, we've had a loss of about 60 crores. This is coming from exchange rate variation. These are primarily mark-to-market in nature. So that's the reason there has been a dip in the other income in quarter ended December 22 as compared to the quarter ended September 22. At the EBITDA level, on a year-on-year basis, EBITDA is up by about 57%. Depreciation is up by about 44%. And the interest expense, there is a reduction. So there is a drop of about 6% there. We do have an exceptional item, reversal of some excess expenses recovered. And that's why there is a negative sign. So just add it to the other income. Exceptional item. So we have a PBT of 4.7 crores. And we have tax reversals of about 47 crores, giving us a PAT of 52 crores, which compares very well compared to a loss of about 37.9 crores, which we incurred in quarter ending December 21. So there is a substantial increase on a year-on-year basis between December 21 and December 22. Moving on YTD basis, I'm on slide 22. Total income is up 18.2%, and out of which other income, which includes FX variations as well as interest income, that's up about 326%. Our EBITDA has more or less come close to doubling from about 322 crores to 627 crores, giving us total EBITDA margin of 16.3%, including the other income. After taking into account depreciation, interest, and the exceptional item, the profit before tax has come in at about 205 crores compared to a loss of 125 crores for 9 months of the previous financial year. And at a PAT level, the profit after tax is about 279 crores as compared to a loss of 78 crores in the quarter ending December. So again, on a 9-month basis, substantial increase in profits after tax. Moving on to slide 23, the book value per share, taking into account shareholders' funds as of December of about 8,880 crores, comes to about 1692. And if you recall, the buyback price is at around 1,700 rupees per share, which is at a significant premium to the current market price of 1,300. On a trailing 12-month basis, our EPS comes to about 62 rupees per share. We have gross debt of about 330 crores and cash of about 1,343 crores, leaving a net cash position of about 1,014 crores. Moving on to slide 24. So this gives a better picture in terms of where we have in terms of borrowing, which is 330 crores, and take into account the cash investment in debt instruments as well as short-term loans given. The total amount of cash and treasury surplus, the sum of these three items, comes to about 6,716 crores. Moving on to slide 25, this is the revenue split for operating revenues of 1165 crores. The BPM business accounts for about 65%. This is voice as well as non-voice. The digital services comprising digital media, digital cloud services, analytics, all that put together comes to about 31%, and other income comprises of 4%. Moving on to slide 26, on the revenue from operating revenue. From a origination perspective, the US continues to be the largest source for origination. That's about 33%. 29% from India. This includes the digital media services. UK is about 20, 13 is from Canada, and others, basically Philippines, Jamaica, Middle East, account for about 6%. On the left-hand side, the revenue by delivery, India accounts for about 33%, US 26%, Philippines accounts for about 9%. Moving on to slide 27, this is the split again, revenue by vertical. The largest vertical is media, followed by consumer. This is consumer, e-commerce, products, anything consumer basic. Telecom and technology is the third largest sector at 11%, and same size as public sector, which is predominantly from UK. Moving on to the client concentration. Again, this is based on the client total revenues, operating revenues of 1119 crores. The top customer accounts for about 7.3%. 28% will be for top 5, and top 10 account for about 43%. Our business in terms of DSO days continues to be healthy, and it comes in at about 62 days compared to 60 days as of 31st of March. Moving on to slide 29, that shows the HGS share price movement, and we were at about 1,300 on close of Friday, and we are about the same levels today. So share price, and this factors into account the 1:1 bonus, which was issued in February 22. So our shares have been trading ex bonus from about a year ago. With this, my section comes to an end. So I'll now hand it back to Partha and Dhruv to discuss the digital future and how HGS will deliver the digital future.
So before we jump in, I want to just take a moment to say, where is the future for this business? So you would now see that we've got a portfolio of services that we do. We have our traditional BPM businesses, we have technology businesses, we have digital media businesses, we have HR solutions as well. Our goal is to deliver compelling digital solutions and services to fulfill client needs globally, today and for future. And to take you through what that looks like, I'm going to hand it over to you to take us through the next 3 slides of what the future of this business looks like and what the new avatar of HCS. Over to you.
Thanks, Partha. So, as Partha said, our aim is to look at how we can deliver a widest variety of solutions and products and services to the market so that we can provide larger solution offerings to clients from multiple different industries, right? Whether that is through our acquisitions over the last couple of years. We've really built up a huge technology base. We've really invested in new talent and new products and service offerings that put together offer clients a much wider selection of service offerings. So if you just move to the slide number 32. So from being a traditional business process management organization, we are now able to look at technology services, software as a service, platforms as a service, which we're already doing through products like Agent X and Da Vinci. We have a very strong software development organization with the merger of Next Digital. We now have a very strong engineering base also to complement all of these technologies. The data services with TechLink and with our own internal development, we're starting to look at business intelligence and analytics, the capabilities around artificial intelligence in various industries, and how those can improve processes and processes for companies. And we have a very strong base through Next Digital itself with respect to networking and connectivity, both for media and telecommunications, which can expand well beyond India to the rest of Asia Pacific and potentially globally. So the whole aim of this slide is to really demonstrate how we are expanding, and we are now able to offer all of these range of services, as I said, to multiple different industries, whether that is media and telecommunications, financial services, energy, healthcare, or any other sort of industry line. We can now develop sort of end-to-end solution offerings for them. So if we just quickly move to slide 33, this is just a snapshot of one of these types of end-to-end solution offerings that we are starting to develop, using all the skill sets and acquisitions and capabilities within the organization. So in this first example, really we are looking at a series of network management solutions aimed at any industry really that has multiple different networking and connectivity requirements. And this is not geography specific. This can be applied anywhere globally, so in any geography. So we're looking at the development. We are developing network management solutions, both as software as a service as well as a platform as a service, which will enable companies to really procure connectivity services in a much more organized fashion than they can do today, as well as be able to monitor and manage large network connectivity platforms. So think of the financial services financial services industry. Banks which have hundreds, if not thousands, of branches across the geography can now manage all of that connectivity in a much more organized and clear fashion. We're also working on developing work from home solutions. So now after COVID, as we are, there's still hybrid working. Very much is the scheme of things in this new world post-COVID. how do we really improve the work from home conditions such that we ensure not just secure connectivity to back-end systems, but also that we can monitor and ensure that people are actually delivering what they're supposed to be delivering. As Vince Lee discussed earlier on, another key area that we are working on is live interactive education. Again, this is not India specific. This is something that can be rolled out on a global and larger geography basis in terms of how can we deliver to more rural and areas that are not well connected, live educational facilities that really improve those, the quality of life in those areas. Managed services, we are implementing managed service offerings, which take, with the advantage of Next Digital's engineering teams and HCS's existing customer support teams, really end-to-end solution of managing customers' networks, designing, deploying, and then really managing them going forward. And infrastructure, particularly in India, we have a pan-India connectivity network, and really be able to expand those with partners and with competitors to be able to deliver wider connectivity services and broadband over satellite, as Vince Lee mentioned, with Next Sky-Fi, the opportunities that offers within the world are just humongous, right? Whether that is monitoring remote wind farms, power generators, education. There's a whole suite of services that really broadband over satellite can start to deliver, both within India as well as internationally. So these are just some of the integrated solutions that we are already starting to develop as a combined organization, and there'll be many more of these as we go along. Over to you,
Yeah, so we have come to the end of our presentation. We're going to hand it over to the moderator for the Q&A session. Over to you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Neet Singh from CCIPL. Please go ahead, sir.
Hi. So, can you please help me understand the other income component of our financials? Because I believe without that, we would even not be PBT positive. So, can you help me understand what does this other income that we see every quarter entail?
Ladies and gentlemen, the line for the management is disconnected. Please hold while we reconnect. gentlemen, thank you for being on hold. We have the line for the management reconnected, so please go ahead.
So after question answer session can start. Sorry for that. Please go ahead.
Yes, sir. Am I audible?
Yes. Yes, please.
Yeah. So I have just had, my first question was regarding the other income component in our financial statement. We see other income, large amount of other income every quarter, and I believe without that, we would be, our PBT would also not be positive. So can you help me understand what all does that entail?
So there are 2-3 different components. One is the interest income. As I mentioned, the company is sitting on a large treasury balance. So that's the one with treasury income which comes there. Offset in the current quarter is an FX loss, as you'll see there on the publishing page. That comes to about 60 crores of losses which come from the FX variation. So the other income, it's not only positive, there's also the impact of 60 odd crores which has come in the quarter and this quarter. And from the digital media side, we have some additional income from sale of set-top boxes, those kind of things which come under other income.
All right. And sir, my second question is regarding the digital business that we acquired from NXT. So I believe that that business was not a profitable business at the time of acquisition, and currently we are competing with large players in the broadband space, and also considering that most consumers are moving away from the traditional set-top box or the traditional TV channels to softwares like Netflix and other Hotstar. So what would be our plan to compete with the bigger players, and how can we drive growth in such a segment where we see such big players and also a market that is against us?
Sure. So thank you for your question. This is Vinsley here. I think you're absolutely right in terms of the changing dynamics of the industry, right? More and more people are moving to online, more and more people are moving to content on demand. But there's also a significant part of India which is still not connected. And this is not something I'm saying, this is what the numbers point to themselves. There's about 80 million homes that are still unconnected in terms of a television, and those are an aspirational market. So we've been smart about one thing. Rather than launch a wired connectivity service for the television business, in 2015 we launched a satellite service. So that means even the most rural part of India can go digital and receive television literally overnight. That's one side of the spectrum to answer your question. The other side is that if you look at our focus in terms of growth, we are looking effectively at the broadband business and improving the quality of revenue in that area. Just to give you a very short sense, if you look at clearly the broadband parameters, we're already the 4th largest broadband private ISP in the country today, with over 1 million customers. Our entire focus of growth is on that. So last year, this time, we were about 740,000 customers. We've grown by nearly 50% to where we are today at 1.18 million. And we see that growth continuing because more and more people want a wired broadband connection. And as you know, the government recently changed the definition of broadband to 2 Mbps. So that is something that we're delivering. I mean, we deliver up to even 1,000 Mbps, as you would probably know. The third thing is, as a business, we're very proud about one thing in the group and HGS in particular. We're always at the forefront of innovation. So right now, if you look at broadband over satellite, we are the only bundled solutions player in the country today who have already launched. Everyone's talking about launching, and of course we welcome them because a lot of them are also looking to kind of align with us and become our partners. But we're not necessarily waiting for that. We've already launched our service. As I shared with you on the deck, we partnered with Tata Study to deliver education, and it's already working beautifully in places like the Northeast and the North where connectivity is a challenge. So I think as an organization, we are very clear that we focus on the trends, and with the changing trends, we continuously innovate. And one more thing, again, just last point to your question, if you saw if you go back to slide number 16, I specifically mentioned that our focus is not on pure play television, it's on a integrated solution for customers, which is basically not just television, but that also includes broadband with speeds up to 1,000 Mbps, includes international and regional OTT, includes voice over IP and intercom, includes CCTV, and also community and building Wi-Fi. So I think we're well structured to take on the challenges, and like I said, our focus is to continue to innovate and grow. I hope that answered your question, sir.
Yes, sir. Thank you very much for elaborating. So I have another quick question regarding this only. Another thing that I want some clarification on is the tax rate that we see. Currently, we see that a negative 40% of something kind of tax rate. So can you elaborate on that as well?
Sorry, could you just repeat your question?
The tax rate that I'm looking at currently in the financial statement is a negative figure. To be exact, it's about the tax. We're basically paying negative tax. So can you please help us understand the reason for that and what should be the expected tax rate going forward?
So, if you see the results for the quarter ending 1 and 2, this is the impact of the consolidation. And we've looked at the overall taxable positions of SGS plus the media business put together. And looking at taking into account the certainty of the future profits, we have created a deferred tax assets, right? So that's what you would see in Q3. That's why you're getting with the negative number. So the changes are coming primarily from the deferred tax item. But otherwise, at the overall level, we would be in the tax rate of about, the current tax would be in the 25% range.
All right, sir. Thank you very much. My last question would just be regarding the future outlook. Given that the IT is under a bit of pressure and stress for the coming year, and how do you see our company doing in the next, say, 1 year, next couple of years, in terms of the revenues and the margins?
Yeah, we have always had a good track record of growth. So if you go back to our history, you will find that we've grown at the minimum 10% year on year for a very, very long time. With the healthcare divestment, obviously, there has been a pressure on our margins. That's pretty clear. And because healthcare was an extremely profitable business, the team is now focused on improving the profitability of the rest of the business. So today you saw that the profitability is about mid-single digits. We would like to improve the profitability of the business to digits, and therefore, there are some plans in place as well. It's going to come from taking some costs out. It's also going to come from acquiring more profitable revenues and businesses as we go forward.
Great, sir. So can we expect a double-digit margins for FY24?
Yeah, look, I cannot give you a committed timeline when we want to achieve that, because that's going to be almost like a guidance. We don't give guidance. If you look at our track record and then decide for yourself, we have been highly profitable from the beginning from our inception, right? So, and you've also seen that we've actually gone on improving the margins. There are some levers that we can pull around real estate rationalization. As you know, that a large part of our workforce is now working from home. In the North America and in UK, it's almost as high as 95%. So till last year and even till some parts of this year, we had long lease liabilities that we were not able to exit off. Thankfully, we've been able to now exit off some of those lease liabilities, as a result of which margins will improve because our lease costs will go down. We've also been able to divest some of the properties that we used to own in Canada and UK, and we got reasonably good returns from those divestments. So that is also another lever that we can put. We also believe that we can improve our IT costs, and that is the third lever that we can put. Unfortunately, during the time of COVID, we locked ourselves into some long-term IT costs that we can't exit right now without paying significant exit costs. But the current pricing of those services is actually much lower than the lock-ins that we have today. As and when we exit from those contracts as per contractual commitments, then even our IT costs will improve further. So these are 4 levers that we have. And the 5th one is growing or acquiring businesses that are much more profitable, which is in the technology space. So these are 5 things that we have in mind. I won't be able to tell you that this is going to all happen by 2014, but this is directionally where I would like all of us to go to.
All right, sir. And sir, when would the TechLink be incorporated?
Join the question queue, sir, as we have many participants waiting for the turn.
Yeah, sure. Thank you very much, and all the best.
Thank you.
A reminder to all the participants, anyone who wishes to ask a question may press star and 1. We take the next question from the line of Jyoti Singh from Arihant Capital. Please go ahead. Jyoti Singh, your line is unmuted. Please go ahead with your question.
Yeah, thank you for the opportunity. So, my overall question is that earlier we did demerge our healthcare business. After that, we did the buyback, and now we are doing, like technique we did, and also that educational thing we did. So, overall, what's your view on the company, and what's the big thing that we are planning to do going forward, and what are the strategies that we are following to make our company more stable?
So I think Ru tried to cover that in the last closing presentation slide. You should refer to those slides that tells you a broad spectrum of services that we want to get into. Some we are already in, some are at a nascent stage, we are going to scale them up. So that broadly answers your question. If you have any specific question, happy to answer. But if your question is generically what we're going to do, that question is already answered in the specific slides. I'll give you the slide, you should look at that. Just
Sure. So, sir, my question is on the on a slide number 19, mention about the ARPU. So that it is flat since last few quarters. Are we working on any strategy to improve ARPU, or we're expecting to remain in the range with the company focusing on volume gain, both on the digital video ARPU and broadband subscriber?
Ladies and gentlemen, the line for the management is disconnected. Please hold while we reconnect them. Ladies and gentlemen, thank you for being on hold. The line for the management is reconnected, so please go ahead.
Yeah, I was asking the question, of the general direction of the company. We tried to answer that in a fair amount of detail in slide number 32. You should refer to that slide, which gives you directionally where we are headed. Okay, we're trying to do many new things. Some of these are already there. Some of this is in our base book of business. Some of them are new. nascent service offerings. So direction, the roadmap is there in slide 32. That's the generic answer to that I can give to the generic question that you had. But if you have anything specific to ask, then I can be more specific.
Yes, sir. I was asking about the ARPU thing, that trend is flat since last few quarters. So are we working on any strategy to improve ARPUs, or we are expected to remain in the range with the company focusing on volume gain? So both on the digital video ARPUs and broadband subscriber ARPUs.
Yeah, sure. So thank you, Jyoti. This is Vinsley here. As I was mentioning earlier, the focus over the last 3 quarters for us has been on ensuring sustainability and quality of revenue. We have, therefore, our skew earlier used to be towards growth, if you look at the last couple of years. These last 3 quarters, coming out of the pandemic and the challenges faced, we focused on 2 things. One was improving the quality of revenue and sustainability, and the second was coming out with innovative products. If you look at the performance of Q3, and if you do an analysis, and I'm sure you as an analyst would know, if you look at a peer-to-peer comparison, or if you look at for both 9 months as well as QOQ, you'll see that there has been a consistently improving and upward trend in terms of the margin, both in terms of value as well as the percentage margin. That is reflective of the fact that we want to ensure growth and the retention of high quality and high ARPU customers. So the ARPU that we provide in the data is a blended ARPU of enterprise and retail customers, but that is a very significant and stable ARPU if you look at mapping it quarter on quarter. And that will continue. You'll see that continuing QOQ as well as, against last year as well. I hope that answers your question, Jyoti.
Yes, sir. Thank you, sir. And sir, second question is on the profit side, that has been largely impacted by provision attributable to healthcare business. So wanted to understand why the provision have not been transferred despite being entire business demerged.
So this particular part was not transferred because it's an old legacy item, and that has been settled, and hence the reversal.
Okay. And sir, on the buyback side, the cash we will going to utilize, what are the strategy on that side, and how are we going to ensure some cash on the book for continuing our growth momentum?
So, as you know, we have announced a buyback of 1,020 crores. And so, the record date is 6th December, and we will see, 6th March. And we will see how what the buyback goes. So there will be some amount, 1,020 crores odd, which will go for the buyback. But the rest of the cash is available for growth of the business. As we've announced, TechLink, and we hope to close that soon. And we will continue to look for opportunities to grow our overall, predominantly digital strategy, what we discussed a little earlier in the call. Okay.
And sir, on the digital services, have currently around contributing 30% of the revenue. So is it our intention to increase the same given the higher EBITDA margin?
Yeah, digital in general has higher margins, and obviously we would like to grow the share of the digital revenues.
Okay. Thank you, sir. That's it from us.
Thank you, Jyoti.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. We take the next question from the line of Hina Parekh from Hinduja Securities. Please go ahead.
Hello. Hi. Can you let us know what's the strategy for media and communication business? And since the loss has gone up year on year on quarter, so by when can we expect business to turn profitable?
Okay, I'll start with the strategy. As I was explaining to Jyoti, if you look at the kind of product portfolio that we've been focusing on, If you look at individual verticals, you'll see cable television globally has a structural decline. So does wired broadband in terms of being a standalone product. But when you look at combining and offering these solutions under a single window, under a single operating method, obviously the uptake is much higher. I mean, I'll give you a simple example. You're at home, and imagine you get one person coming over home for the cable bill, another one coming for the broadband bill, a third person for the voice bill, a fourth person for your CCTV service, fifth person for your OTT. OTT, of course, you can go and do online, but all the other services tend to be a challenge. So the idea was of integrating all of this and bringing it to the fore, which is something that we've done. So One Digital is obviously our push. The second big thing, and this is in sync with the digital inclusion and the digital vision and mission of our Prime Minister, is to take digital all across the country. And therefore, with a satellite offering, which obviously has an uptime way beyond what a conventional connectivity of fiber can provide, we chose to launch it in the far reaches of the northeast and north. But however, having said that, broadband over satellite is a strong enterprise product, right? We're already talking to corporates in terms of providing them a hybrid solution of wired and wireless connectivity. So imagine if you have a network of ATMs. In the cities, you'll connect them on wire wherever you have fiber. And as you know, we have over 10,000 kilometers of our own fiber and more than 120,000 kilometers of fiber from our franchisees. But there are still parts of India which obviously require satellite connectivity, and that's where those ATMs or those services will be facilitated by broadband over satellite. So there is significant traction that we're looking at in terms of which are the areas that we want to target, which are the markets. We've taken it, we're well on course. As you know, we signed an MOU for this service only in May. In fact, we announced it in June. And barely in 3-4 months' time, that is in October, just at Diwali, we launched the service. We expanded it in November. We applied for our VSAT license. We received our VSAT LOI in the month of January. So I think you'll see a lot of traction in this space happening in terms of providing these solutions. So yes, the focus will be on ARPUs. Yes, obviously the focus is on improving the bottom line. Obviously, we have a strong EBITDA performance, but as a business, obviously we are looking at several levels below the EBITDA to be able to make sure that the business is on